You may not like what I'm going to tell you in the next 10 minutes. I'm not here to win your hearts either. This video may be taken down in no time as well. Let me tell you something that most Indian finance channels won't be talking to you about. India's 13% underperformance in 2026 is not bad luck. It is not unfair. It is not a foreign conspiracy. It's a bill for a decision we didn't make in 2022 when we had every signal that the world was about to enter into a chip war. Korea saw it, Taiwan saw it, the US saw it, the China saw it. All four of them moved aggressively between 2019 and 2022. What did India do? We approved our first major chip mission in December 2021, more than 2 years after the global rush already started. And even that, most money sat unused for the first 2 years. Today, Korea's stock market is up 75%, Taiwan is up 33%, and India is down 13% all in dollar terms. Coincidence? No, this is what strategic delay looks like when it shows up on chart. In the next 10 minutes, I'll be making a case that's going to make some of you uncomfortable, but it needs to be said. Let's go. Let's go back in 2019, the US-China trade war escalating. Trump administration bans Huawei from buying American chips. Every major economic forums on the planet is talking about one thing: semiconductor supply chains are now moving valuable assets in geopolitics. Forget oil, forget gold. Chips are the new strategic commodity. Then 2022 happened. COVID hits. Within months, the entire world realizes we can't manufacture cars because there are no chips. We can't make consumer electronics because there are no chips. The global chip shortage of 2022 cost the auto industry alone $210 billion lost in revenue. Every government on earth understood the lesson: if you don't make chips, you don't control the economy. Wait, hello. If you watched the video this far, it means you like the video, and to display your like, click the like button so that this reaches maximum number of people. Now look what the other countries has done with that kind of an information. May 2022, Taiwan's TSMC announced a $12 billion fab in Arizona. Construction begin within 18 months. May 2021, South Korea announced Semiconductor belt $451 billion national investment. Not crores, dollars. That is over 37 lakh crores rupee in 2021 commitment for chips alone. Samsung and SK Hynix get aggressive incentive, tax breaks, dedicated land. In the August 2022, the United States passes CHIPS Act, $280 billion in funding and $52 billion specifically for chip manufacturing from the US soil.
Today I'm signing the law of the Chips and Science Act, a once-in-a-generation investment in America itself, a law that the American people can be proud of.
Intel, Macron, TSMC, Samsung all gets to work within months. China has been pouring money into the big fund since 2014. By 2024, the total Chinese semiconductor investment crosses $150 billion, aggressively, illegally, and rather efficiently. And in India, in December 2021, 18 months after the rest of the world have moved on, we announced the India Semiconductor mission with 76,000 crore commitment. In dollars, that was about 9 billion. Korea spent 50 times more, the US spent 30 times more, and even that $9 billion wasn't fully deployed. The first actual chip plan didn't get inaugurated until the February 2026, that is recently.
आज साणंद में हम नए भविष्य का उदय होते देख रहे हैं। माइक्रोन की ये फैसिलिटी भारत के नए मिजाज का भी एक शानदार उदाहरण है। इंडिया इज रेडी, इंडिया इज रिलायबल and India deliver.
5 years between announcement and first plan. So what did that 5 years delay cost us? Let's look at the hard numbers. Before we get into the facts, if you're an Indian investor, comment as to how much you have invested your money in India and how much returns has it made for you in the last 2 years. Korea's stock market has gained 75% in 2026 alone. Taiwan's TSMC has crossed $2 trillion in market cap, more than the entire Nifty 50 combined and put together. SanDisk, a single American memory company, has returned 4,000% in 12 months. Samsung Electronics is up 400% in a year. SK Hynix is up 749%. Every one of those gains went into investors in Seoul and New York. Almost none went to the investors in Mumbai. Why? Because India's listed semiconductor exposure in 2026 is essentially zero. Kaynes Technology, yes. CG Power, yes. Tata Elxsi, yes, but these are crumbs from somebody else's table. We don't have an SK Hynix, we don't have a TSMC, we don't have a Samsung. We choose not to build when the entire world was begging for alternatives. And here's the part that should really make you angry. India produces approximately 20% of world's semiconductor design engineers. 1 in 5 chip engineers on earth is Indian. They work in Bangalore, Hyderabad, Pune. But here's the catch. They work for Nvidia, they work for Intel, for AMD, for Apple, for Texas Instruments, for Broadcom. Their salaries were paid in dollars. The patents filed under American, Korean or Taiwanese company name, their intellectual properties rights goes building into Samsung HBM chips and Nvidia's GPUs. India trained these engineers using public funded engineering colleges, the IITs, the NITs and the BITs, and then handed over them to global tech giants because we never built a local industry that could employ them. Now imagine if these 5% of those 2 lakh plus Indian chip designers were working for an Indian owned company, Indian listed chip company that an Indian investor could buy. That company would have been worth tens of billions of dollars put together today. We have the raw materials, but we did not build the factory. So why did this happen? Why did India consistently fail to act when the signals were screaming? I'll give you 3 uncomfortable answers. For 30 years, India has been told the same flattering story that we are an IT superpower, that we are the back-end office of the world, the service exports are our destiny, and that story sold us short. While we celebrated TCS adding another 1 lakh employees, Taiwan was quietly building factory that would become more valuable than all of these Indian IT companies put together. Software is great, but software runs on hardware, and whoever owns the hardware owns the margin. We own the labor, they own the leverage. Make in India was a slogan, not a strategy. Make in India was launched in 2014. 12 years later, manufacturing as a share of GDP is actually lower than when it was started. That is a brutal truth. Lots of announcements, lots of MOUs, lots of foundation stones, very few actual operating factories at global scale. Now compare that to Vietnam, which at the time went from being a footnote in global supply chain to assembling iPhones, Samsung phones, and now exploring chip packaging. The semiconductor industry runs on speed. From green light to operating fab is supposed to be at 24 to 36 months. In India, first approval from the late 2021 only became operational facility in early 2026, over 4 years from the announcement to river cutting. Land acquisitions, environment clearances, state versus center coordination, water access dispute, every one of these added quarters and years. The cost of that delay isn't just rupee lost, it's a market position permanently surrendered. By 2026, the global chip industry consolidated around 3 or 4 winners. India is now trying to enter the market that's already played most of its hand. Now, to be fair, the course correction has begun. It's late, it's inadequate, but it's real. Let's acknowledge what's happened in the last 18 months. Micron Sanan packing facility went live in February 2026. Keynes Semiconductor plant in Gujarat in March 2026. Tata Electronics is building a fab in Gujarat with Taiwan's TSMC, HCL Foxconn joint ventures signed in February. 10 semiconductor projects across 6 states with combined commitment over 1.6 lakh crores of rupees. Budget 2026 launch ISM 2.0 finally focused on equipments, materials and designed IP, which is where the real margins are. Now let's not get sentimental. None of these are advanced node fabs. India still cannot produce 7 nanometer chips or 5 nanometer chips or 3 nanometer chips for that matter. Tata PSMC fab produces 28 nanometer to 90 nanometer chips, useful for cars and basic electronics, useless for AI training. We are entering into the market at the lowest end, while Korea and Taiwan dominates at the higher end. The high end is where trillion-dollar valuation lives. Could we eventually move up the value chain? Yes. Will it happen in the next 5 years? Honestly, probably not. It took TSMC 30 years, Samsung 25. We are going to be in the slow climb for the long time. Every year, what we delay, the gap widens. Okay, so we have accepted that India dropped the ball. What does it mean for you as an investor right now? 3 honest takeaways. And again, this is education, not advice. Consult a SEBI registered advisor before doing anything for that matter. 1. Stop pretending Nifty exposure equals to global participation. If your entire portfolio is an India index fund, you are 100% exposed to the country that has structurally missed the most important industrial cycle of that generation. That is concentration risk, not patriotism. Diversifying out of India is not anti-national, it's basic portfolio management. Every wealthy Indian family offices figured this out years before, and retail investors haven't. Use LRS aggressively, not someday, now. RBI's liberated remittance scheme let you invest up to $2.5 lakh per year. Apps like InMoney, Vested and HDFC Sky have made it 10 minutes process. There is no excuse for an Indian investors with serious capital not to have at least 15 to 20% of their portfolio in global semiconductor and AI exposure like Korea ETF, EWS, Taiwan ETF, EWT, Semiconductor ETF, SOXX, TSMC ADRs. The cost of induction is exactly what happened to your Nifty portfolio in 2026. Number 3, India's semiconductor stocks are watch list. Not yet a buy price. Yes, Keynes Technologies, CG Power, Tata Alexis, Dixon are all participating in India's chip story, but they have already priced richly relative to the current earnings. And the actual revenue from the chip operation is years away from being materialized. Watch them, build a tracking position, but don't pretend they are equivalent to owning Samsung or TSMC. They are not. They are early stage bets on stories that may take up to 7 to 10 years to play out fully. Let me close this with something that is going to be controversial. Most Indian content creators treat every market dip as a buying opportunity and every government scheme as a proof that India is rising. I am not going to do that with you today. India is not rising as fast as we tell ourselves. It is Korea, Taiwan, Vietnam, and even Mexico that are eating opportunities that should have been ours. Our 13% outperformance in dollar terms in 2026 isn't an anomaly. It is a data. It's telling us something, and that something is strategic decision from 5 to 10 years ago now showing in our stock returns, our currencies, and our foreign investment flows. Patriotism isn't pretending everything is fine. Patriotism is being honest about where we fail and where we stand. Fixing it, demanding better from the institutions that are supposed to plan our economic future. The same way Korea demanded better, the same way Taiwan demanded better, the same way the US is now demanding better with the CHIP Act. If you are a retail investor, protect yourself. Diversify globally. Don't bet on the retirement on Nifty alone. That may take another decades to catch up. If you are a policy follower, push up for execution speed, push for advanced node, push for export-led semiconductor strategy, start applauding announcement and start demanding deliveries. Tell me in the comment, do you agree with this take or do you think I'm being too harsh? Genuinely, I'm interested in pushback. And if you want me to go deep dive on actual mechanisms on how Korea built its chip empire from the scratch in 25 years, the policy decisions, the company stories, what India could literally copy-paste, drop a comment Korea. And yes, don't forget to like this video.